The rally we saw in stock markets towards the end of last week has continued this week. That's despite the fact that the situation in Europe is not completely resolved. Indeed, we'll look at some charts later on showing that some areas of Europe at the moment are still under quite a bit of pressure in their financing markets. But equity markets are climbing that particular wall of worry at the moment, and they're climbing it with some enthusiasm over the impending corporate results season that starts in the US on the 11th of July. And we should see Alcoa, a big steel group, being the first to report, and that will be followed by a swathe of companies reporting numbers for the second quarter of this financial year ending in June, and clearly there is some optimism there as to how businesses have been performing. So if we take a look at the FTSE 100, we can see the impact of this rally over the course of the last week. Obviously started with the signing of that document, the austerity document, which allowed the bailout to proceed, and we quite quickly recovered from what was the low end of the trading range back end towards the top end of the trading range. 6100 on the FTSE is a level that has been hit probably 3 or 4 times now. It needs to break cleanly through there for investors to feel that we may be onto a new level, but nevertheless it's encouraging to see that the market didn't really break toward the low end of the range despite that situation in Greece developing. So at the moment the equity market feels in pretty comfortable form. Now I also want to show the FTSE 250, because when we're looking at charts, the FTSE 250 has indeed broken out towards the top end of its range. FTSE 250 tends to cover more domestic-based businesses. FTSE 100 has many international businesses, as we know, and the situation here looks quite pleasing. This is a chart. It stretches back by probably a year or so, but if we would stretch it back probably 4 years, we would see that this level that's been reached in the course of the last week is actually a 4-year high for the FTSE 250. So it's telling you a story here that actually the businesses, there is an underlying more positive picture than the FTSE 100 is presenting at the moment, and it's very encouraging to see the FTSE 250 break towards the top end of the range. Maybe it is the lead indicator of the FTSE 100 to go through the top end of its range over the course of the next few weeks. So if we take a look at what is driving some of those moves in the FTSE 250, I believe that mergers and acquisitions is an emerging theme at the moment. We have seen, just in the course of the last 2 weeks or so, an interesting run of takeovers and mergers being announced for companies that are listed in that particular index. If we look here, this is Misys. This is a computer-based business, and this has already attracted the attentions of one company prepared to make a bid. You can see a very, very sharp appreciation on that stock price. This week we also saw an American group looking to bid for Axis Shield, and you can see there an extraordinary rise in that share price, really caught most investors out. The takeover premium there of about 30% above the current share price has caused that share to really spike up at that point. But it's not just sort of technology businesses that are attracting attention. Here we have Northumbrian Water that is attracting attention of a Far Eastern group who wish to acquire this business, and again the takeover premium here has been quite significant. And also a final chart I would look at is Charter Group. Now we mentioned this last week on the back of a profit warning, which caused its shares to fall quite sharply, but of course somebody stepped in very quickly. This time it's Melrose Engineering, which is on our buy list. Melrose Engineering have indicated that they would be prepared to make a takeover of this business at about $7.85, and the shares are already trading at a premium to that $7.85 indicative offer. The market is suggesting either Melrose will need to raise its offer, or indeed Charter could attract attention from elsewhere. So what can be summarised out of this is that when offers do come in for businesses, they tend to come in at quite big premiums to the current share prices of businesses, and I think that is giving certainly some support to the FTSE 250 and to the valuations of businesses, that despite the worsening conditions in Europe at the sovereign level, businesses at the moment are attracting these type of bids. I do think that this profit warning from Charter sector is something to keep an eye on for two reasons. One, why is their business slowing? And indeed, Premier Farnell, which is a big international distribution company, has warned on profits this morning and seen its share price drop by 20% on the back of the warning, citing slowing trading conditions at the moment. And we wonder whether this is to do more with that softness in the US demand related to the Japanese earthquake that started to filter through and could prove to be a temporary factor. So I think that it's not all upside. We have to be prepared for some industrial stocks to be warning on profits at the moment. But the charter experience is that good businesses, if they do have a sticky patch in their trading record and their share prices do come off quite sharply, we can always see bidders coming in as quickly as they have done for charter. Now finally, I do want to turn to Europe. I mentioned at the start that the European situation at the moment is certainly not resolved. And just as a word of warning, as we go into the optimism of next week with Q2 numbers, that some of the bond yields on other European countries have widened further this week. This is the Italian bond yield, and you can see there that despite the Greek bailout, it has pushed on to a new high. And finally, we look at Portugal as well. Portugal has done exactly the same. I suspect that this is going to continue to run over the course of the summer and will weigh on equities to some extent, and we need to expect that volatility will continue to increase. It's a bit of push and pull, good corporate earnings, but still it appears that Europe is going to have a bearish influence on stocks.